Welcome to this past paper walkthrough. In this video, we will work through a question where students must identify accounting errors, correct them using journal entries, prepare a suspense account, and calculate the final corrected profit. Here you can see all the errors. You may take a screenshot to keep a record of the errors in the question. The first error is that $200 of wages has been entered in the cash book but not posted to the wages account. This means the cash account has already been credited, but the wages account has not been updated at all. Since wages are an expense, we need to debit the wages account with $200. According to the double entry principle, we cannot leave the credit side empty. However, cash has already been credited as shown by the updated cash book. This leaves us with a missing credit entry, which is recorded in the suspense account. Therefore, the journal entry is debit wages $200, credit suspense $200. On the right-hand side of the screen, I have shown the journal entry in the exact format expected in the exam. The second error relates to a credit purchase of $247 from Stella. This transaction has been debited to Stella's account and credited to the purchases account. This is a reversal error because Stella is a supplier. A credit purchase should result in crediting the supplier's account and debiting the purchases account. However, Rai has recorded the exact opposite. To correct a reversal error, we must first undo the incorrect entry. We do this by crediting Stella's account and debiting the purchases account with $247. The correction does not stop there. We now need to record the original transaction in the correct way, which is to credit Stella's account with $247 and debit the purchases account with $247. After posting all the entries required to correct this error, we can see that Stella's account appears twice on the credit side for $247, and the purchases account also appears twice on the debit side for $247. Instead of recording these entries separately, we can combine them, since the same amount appears on the same side of the same accounts. Therefore, the final correcting entry is credit Stella $494 and debit purchases $494. Once again, on the right-hand side of the screen, I am showing you how this entry should be presented in the exam answer. In error 3, both sales and rent payable are overstated by $100. Sales appears on the credit side and rent payable appears on the debit side. Because both sides are overstated by the same amount, the total debits and credits remain equal. This is why the error is classified as a compensating error. The effect of one error is offset by the other, so the trial balance will still agree. As a result, this type of error is often difficult to detect and usually comes to light only when the individual accounts are examined closely. To correct the error, we need to remove the excess $100 from both accounts. This means reducing sales by $100 and reducing rent payable by $100, ensuring that both balances now reflect the correct amounts. Once this adjustment is made, the accounts are accurate, even though no suspense account is required as double entry was not broken. Now let's correct the error step by step. First, we identify whether each account has been overstated or understated. Rent payable is overstated, which tells us that the amount recorded is higher than it should be. The question only mentions an overstatement and does not indicate a problem with the debit or credit sides, so we assume that the double entry itself is correct. Since rent payable is a debit account, an overstatement means it has been overdebited by $100. To correct an overdebit, we must credit the rent payable account with $100 to reduce it to the correct balance. Sales is also overstated. As sales is a credit account, this means it has been overcredited by $100. To correct an overcredit, we must debit the sales account with $100. Therefore, the correcting journal entry is debit sales $100 and credit rent payable $100. This adjustment removes the excess from both accounts while keeping the double entry principle intact. In error 4, a check for motor expenses of $75 was debited twice to the motor expenses account. The issue here is not with the debit or credit side and not with the choice of account. The error is that the same amount has been recorded twice, which means the figure is overstated. As a result, the motor expenses account is overstated. The question only mentions an overstatement in the motor expenses account, which tells us that the bank account has been updated correctly and should not be adjusted. Since motor expenses is a debit account, an overstatement means it has been overdebited. To correct an overdebit, we must credit the motor expenses account with $75. Because the bank account is already correct, we do not touch it. This leaves us with a missing debit entry, which is recorded in the suspense account. In error 5, a payment to Jasper of $196 was recorded as $169 in Jasper's account. The error is clearly in the number recorded, which is a transposition error. You need to look closely to spot that the account shows the wrong figure, not a wrong account or debit credit. If the error were in the books originally, it would be reflected in the original entry. Let's see how to fix it. Jasper is a supplier, so a payment to him reduces Rise liability. Payments to suppliers are debit entries in the supplier's account because the liability decreases. We definitely would not make this payment to a customer. The payment was recorded as $169 instead of $196, which means the account is understated. In other words, it is underdebited. To correct an underdebit, we need to debit the account with the missing amount. To find the missing amount, we calculate the difference between the actual value and the recorded value. $196 minus $169 equals $27. This is the amount that should be debited to Jasper's account. Since only Jasper's account is affected, the credit side is left empty, and we record this in the suspense account. Therefore, the correcting entry is debit Jasper $27 and credit suspense $27. Now we move to the next requirement, preparing the suspense account. First, keep all the journal entries ready, then find the difference between the credit and debit sides. The question mentions that the credit side is $152 more than the debit side. This means the debit side is the lower side, so the suspense account balance will appear on the debit side. We begin the suspense account by entering the balance of $152 on the debit side. Next, we highlight the journal entries that involve suspense. In this question, these are error 1, error 4, and error 5. These are the entries we will consider while preparing the suspense account. Error 1, suspense appears on the credit side with a value of $200. The detail recorded is the opposite account wages. Error 4, suspense appears on the debit side with a value of $75. The detail is motor expenses. Error 5, suspense appears on the credit side with a value of $27. The detail is Jasper. After posting all entries, we add both sides. On the debit side, $152 plus $75 equals $227. On the credit side, $200 plus $27 equals $227. Both sides balance perfectly. The suspense account remains in the ledger and does not appear in the financial statements, so there is no closing balance. Finally, write the date. Since we are preparing this account at the end of the year, the date in this question is 31 January 2023. We've carefully gone through all the errors, made the necessary journal corrections, prepared the suspense account, and calculated the corrected balances. Now we move to the next requirement, calculating the corrected profit after the errors have been fixed. We begin the corrected profit with the draft profit of $9,800. To determine whether the profit will increase or decrease, we review each corrected error one by one. It is helpful to keep the journal entries visible so we can refer to them as we go. In the first error, wages were debited by $200. Since wages is a debit account, this represents an increase in wages expense. When expenses increase, profit decreases because expenses and profit are negatively related. Therefore, profit decreases by $200. In the next error, purchases were debited by $494. Purchases are also a debit account, so this increases the cost of purchases. As purchases are a cost, this increases expenses and again reduces profit. Therefore, profit decreases by a further $494. It is important to note that Stella's account does not affect profit because Stella is a supplier. Supplier accounts are personal accounts, not income or expense accounts, so they have no impact on profit. In the next error, sales are debited by $100, which means sales decrease by $100. Since sales and profit are positively related, this would normally cause profit to decrease by $100. However, rent payable is also credited by $100, which means rent expense decreases by $100. When expenses decrease, profit increases. Because sales decrease by $100 and rent expense also decreases by $100, the two effects cancel each other out. Therefore, there is no net impact on profit from this error. In the next error, motor expenses are credited by $75, which indicates that the motor expenses account was previously overstated and is now being reduced to the correct amount. Since motor expenses are an expense account, a reduction in this expense means that total expenses decrease. Expenses and profit are negatively related, so when expenses go down, profit goes up. As a result, profit increases by $75 following this correction. Jasper is a supplier, so this correction does not affect profit. Since Jasper's account is neither an income nor an expense account, any correction made to it has no impact on profit. Once the impact of all the errors on profit has been determined, we calculate the corrected profit. We begin with the draft profit of $9,800. From this, we deduct all the decreases in profit and add any increases in profit. In this case, we deduct $200 and $494, and then add $75. Therefore, the corrected profit is $9,181. And that completes this past paper walkthrough.